Hi guys, happy Thursday, and let's continue our Forex technical analysis for swing trading. Okay, as you guys know, let's start with the USD index chart, and here we have the market consistently behaving above the blue moving average line, which means the overall trend is up. In other words, USD is strong overall. So that means we're gonna look for opportunities to buy USD. So let's write it down. USD index trend is the up, and we're gonna look for opportunities to buy USD. Okay, USD Japan yen. Here we have the market behaving consistently below the blue moving average line with more than 10 candles, and the breakthrough of this down leg is just dominant on the downside, and which means the overall trend is down in USD Japan yen. So let's write it down. USD Japan yen trend is down. Trend is down. In other words, USD is getting weaker against Japan yen, right? But in the USD index chart, we have USD is getting stronger overall. So we have the conflicting stories. In other words, when we have the conflicting stories, there is no need to force any trade. So we will just wait. So USD Japan yen conflicts with the USD index. So let's move on. Here we have USD Canada dollar loonie. Here market behaved little bit below the blue moving average line, above blue moving average line, below the moving average line. So we are seeing a little bit this back and forth, up and down action of the blue moving average line, right? So that could be an indication of the sideways action. When there's a possibility of the sideways action, there's no need to force any trade. So usually when market oscillates up and down, usually it behaves with a lot of candles, with more than 10 candles. So like this. So here we have, it's barely 10 candles here. The breakthrough of this up movement is just not big enough. There's barely 10 candles down here, but it looks very weak sideways, but there's no need to take a risk, right? So if there's a possibility for sideways action, so let's just write it down as a sideways action, and we will do nothing, because it's a sideways action. No need to force any trade. When we are absolutely sure about our trading signals, then we will enter. Okay, USD Schweizer franc. The first of the market is behaving consistently above the blue moving average line, which means trend is up, and up leg retracement, up leg retracement. When this retracement was about the 50% here, and we entered buy side on USD Schweizer franc, risking about the 0.7% of our account. And since then, market returned into original trend. Now market seems to be retracing again. It should return into original trend soon. So since the market moved enough in our direction, and this local minimum becomes the new local minimum, so I updated my stop loss right below this local minimum. So that opened up a little bit extra position, about the 0.5 to risk it. So currently I have updated my stop loss into this local minimum here, and which is about the break even. So let's write it down. USD Schweizer franc trend is up, leg size is nice. Our decision is to keep the buy position at the USD Schweizer franc, which we originally entered at the 50% retracement, and we updated our stop loss. Okay, which is a perfect execution. So let's move on. Pound USD. Here we have the down leg retracement, down leg. Now another retracement seems to be going on. So if I were you, I would pay close attention to pound USD. If the market retraces into at least the 50% here, then it would be a really good opportunity to sell pound USD. So right now the market reached the 40% retracement, then still I feel like a retracement is going on. So if the market reaches at least the 50% retracement zone here, and you can't miss that opportunity. So let's write it down. Pound USD, trend is down, leg size is nice, and our decision is to wait 50% retracement. If it retraces at least 50%, then sell pound USD. Okay, Euro USD. So here the first of market behaving consistently below the blue moving average line, which means the USD is getting stronger against the euro. So we have down leg retracement, down leg retracement, down leg. Now another retracement seems to be going on. So when the market reached the 50% retracement here, I sold Euro USD and I set my stop loss above the local minimum here, and I set my take profit at the Fibonacci extension 1.618 down here. So risk and reward ratio is about 1 to 3. So right now, if you guys have a position to risk, the Euro USD looks very good. So right now the retracement is hanging out at the 50% retracement, which is a really good zone to enter a trade. So if you sell Euro USD right now, which is a really good opportunity, set the stop loss above the local maximum here. Okay, so let's write it down. Euro USD, trend is down, leg size is nice. Our decision is to keep 0.7%, sell at 50% retracement, which is a perfect execution according to our trading system. Now we entered all our available bullet on the buying side of the USD, so we don't have any more position to risk. So at any point, my risk management is that if everything goes against me, I would be losing 1% of my account. So I updated my stop loss at the USD Schweizer franc position. Now it's currently about the break even 0.1% or something like that, not that significant. And on the Euro USD, I sold extra 0.7%, which is a perfect execution of our trading system. Okay, now let's analyze it. Next pair, Aussie. So here, once again, the market is just behaving consistently below the blue moving average line. Trend is down. Here we have the down leg, but the size of this leg is just too small according to our other directional legs like this. So it just feels not ideal. So that's why I wouldn't recommend trading Aussie. So if the downtrend still continues, market should go down like this with a decent sized leg. Then when the market retraces into a good zone once again, then we should be selling Aussie. So until that, wait. So Aussie trend is down, which is compatible with the USD index chart, but the leg size is just too small and there is no need to try our leg. So when the leg size is just too small like this, it's likely to be taken out on the next retracement, then return into original trend. So we don't need to try our lucks here. So Aussie trend is down, leg size is too small, our decision is to wait. Now let's analyze the New Zealand dollar USD. Again, the same story. We have the down leg retracement, down leg retracement, down leg. Now market seems to be retracing, but unfortunately the last down leg, the size is too small, and when there is too small directional leg, market could retrace, still take out the local maximum here, then return into urgent trend, and we don't need to force our luck here. So our decision is to wait. New Zealand dollar USD, trend is down, leg size is too small, and because of that I'm waiting. So I entered all my available positions on USD Schweizer franc and Euro USD at the buying side of USD. If I look back all this analysis for the last several days, and USD is still strong, and we entered the buying USD Schweizer franc, Euro USD at the 50% retracement, which is a perfect execution now currently. So our decision is to keep the buying position of USD, let the profit run into take profit. Alright guys, see you guys next time.